Central banks around the world have been pursuing policies of quantitative easing, credit expansion, and what I like to call money printing. The fact remains is that they are pushing themselves into a corner that they cannot get out of. This will be impossible. So I raise the question, can the US government save the stock market? Now, a lot of analysts in the news will suggest that they actually do not do this, that they do not intervene in the markets, but I will disclose to you today that it is exactly what they're doing. I've been covering this more recently, and it has to be put some light on. We need to realize what is happening, how the markets are completely contrived because the mainstream media is not going to cover it. The mainstream analysts are not going to cover it. So we are going to have to do it here at the Money GPS. You came here for the truth, so let me unveil that for you right now. Now, the stock market is surging. The NASDAQ itself up 2.4%. What a great day. That must mean that everything is fixed. This article is out of the Wall Street Journal talking about how U.S. stocks rallied on Tuesday, and then right here marking its biggest one-day percentage gain in a year. That is excellent news. That must mean that all the problems are solved and we should begin to invest heavily in the stock market. Well, the reality is obviously quite different. In my book, I talked about this, that governments are pursuing policies that devalue their currencies in relation to real goods, so get rid of your cash and buy those goods that will make you wealthy. What I'm talking about here is, in this case, relating to this being the stock market. If you are looking at the stock market and it is increasing in its number, that is just a nominal increase. It has not actually increased when you factor in what you pay for food, what you pay for electricity, and the overall general cost of living expenses are significantly more now than they were 5 years ago, 10 years ago, and so on. So it's not keeping up with the rate of the cost of living, and that's why it is a complete fraud. That's something they'll never get into, but certainly I will. Now, let's get into the deep stuff right here. This is out of Bloomberg. All the market needs is a $200 billion a quarter from these central bankers. That's not bad. $200 billion, that's pocket change for the central bankers, Janet Yellen, and so on. So what they said here was, policymakers deny the existence of the central bank put. What that means is basically the central banks essentially putting money, if you will. Yet investors still reckon that whenever stocks and other risk assets take a tumble, the authorities will be there with calming words or economic stimulus to ensure the losses are limited. Now, essentially that came from the before with the Greenspan put. I talked about this in my book, but essentially what they would say that any time that there's a problem, the Fed will be there to backstop that. So that's exactly what they're saying right here. But of course, they're denying that this exists. They're saying that this is just a free market, this is capitalism, and it is not crony capitalism, and it's not a contrived market. But let's get into the details right here. This is out of the New York Post, but this information is everywhere. The Plunge Protection Team, also known as properly known as the President's Working Group on Financial Markets, the official name given to the group when it was formed by the President Ronald Reagan after the market turbulence of 1989. So I'm going to flip ahead just for a second here to show you the actual Executive Order 12631 Working Group on Financial Markets. This is right here from archives.gov. This is a government website. I always bring you the real details, the real sources, and I always put them in the description because you as an individual need to know that information. You know, the mainstream media will never source their information, but I always do. It's always there for you to check out so that you can see this is not me, this is not my opinion, this is real. So here it is, the Working Group on Financial Markets, specifically there, and look who's a part of that. It's the Secretary of Treasury, the Chairman of the Federal Reserve, this SEC, the CFTC, all of the biggest criminals of the bunch collecting together, and they are there to backstop any problems, and they've been doing so. I'll get into that in a moment. I just need to flip back here and just say that these forces may be working from the script in the, quote, Doomsday Book, which the U.S. government recently fought to keep secret when it was brought up in last week during the AIG trial in Washington. And here it is. In this article here, they talk about how the market is acting very erratically, and then last minute, something will happen, and somebody will buy up all the shares. Now, that somebody is clearly this right here, the Plunge Protection Team. You probably have heard of it before. So let's get into it right now. The New York Times. This is the Doomsday Book, and what they were saying was that they regret ever calling it that catchy name. And essentially what that is a collection of legal opinions that describe and delineate the Federal Reserve's ability to fight financial crisis, along with a variety of related documents. This got brought up with the whole AIG scandal that happened. And of course, we knew what happened with AIG. Money was just handed over to them. It had nothing to do with a bailout at all. And in this Doomsday book, they were basically will say what they can or cannot do. But what was very interesting about this was that the whole AIG bailout was something that they actually weren't allowed to do according to this book. So it's quite sad actually when they break their own rules, and all of their rules should be illegal because they're not even a completely federal entity. They are actually more on the side of private. You know, you can argue this either way. However, they are definitely not a full government entity. The Treasury, if it was done by the Treasury, the money printing, then we can say this is a government entity, but instead it's not. It's all a fraud actually. Let's get into other things that they said here. The collection is confidential, proprietary, and important. The federal lawyers also have argued that the book deserves privacy because it contains confidential advice of the Fed's lawyers. Well, now they said this many times when Ron Paul tried to get an audit of the Fed, and essentially what happened was they said, look, our actions are very private. It's going to affect the way we do business. And of course, business, because they make money off of this, they're making a profit. But they said, we can't give you the details of these loans that we gave out to hundreds and hundreds of financial institutions all around the world. And what happened when they finally got that limited audit, it showed us that there were $16 trillion in loans given out. But then we correspond that with what the Federal Reserve's balance sheet, and even today, even though it's greater than what it was back then when the audit took place, the balance sheet is only showing 4.4 trillion. And I say only, but it's 4.4 trillion. So what happened to the rest of those trillions of dollars? Well, I guess it just got lost. Of course, it will never be paid back. Those aren't loans, as they say. They say we got paid back all our money. We actually made money from this, and the president is there to be your cheerleader and so on and so forth. But obviously, this is the case that they are hiding things from us. They don't keep things confidential and private for our own good. They do this because they act in secrecy, because they're stealing the wealth from us. The whole system itself is set up to build off of debt. That is basically digging yourself below the level of zero. How can you ever climb upward when everything continues to go down? It doesn't make a single ounce of sense to me. And now we connect into the real world today. Now, if the Plunge Protection Team is actually doing their job, we should see stocks moving up. Now, while the general market has overall been going up over the past few years, take a look at what's happening much more recently. A huge company, McDonald's, profit down 30% on a sales slump. This information out of Forbes. And what I want to mention with this right here is that a big company like McDonald's, and you look at Walmart, you look at Costco, these type of companies are interesting to look at, particularly when we're heading towards recessions, because they often are offering a value price where people need to shop at in order to get more for their money when they realize that times are tough. I also talked about this with Coca-Cola having the same issue. Coca-Cola profit declines 14%. Future growth plans fail to impress. This is out of Forbes as well. The reason I mention this is because we need to look at these statistics to predict what's going to happen in the near future. We can watch as people will be going into at Walmart and type of places like this, Costco, in order to save money. We also need to look at the statistics for real estate, because those are very important. When people buy less homes and choose to rent more, that is another major indicator that they are really hurting. The consumer confidence values are very fraudulent. We can see that the new home sales, we look at unemployment rates, inflation rates. These are all statistics that are not very important. The issues that I talked about in my book with the resource corner, that's the information you need to know. You need to know the real statistics, like I just mentioned. Those are much more important. And I will end it there for the day. I hope that you found this informative. If you did, please give me a thumbs up. It helps me out a lot. And don't forget to become an insider. The Insiders is where I give out all my best intel for free, and that is available at themoneygps.com. You scroll down to the bottom, fill in your email address, and you get occasional emails from me with good, short, concise info.